Alrighty.
All right, guys. So hopefully you can see my little simple access. I added it back in a couple of the slides just for if we have any newer loan officers, but I'm not going to take too much time and go super into depth about all the ways that we can benefit from non-QM, because I don't know how much time we have allotted to, and I don't want to take up all of our time here. But we will make it as brief as possible. This is actually a bank statement review only presentation. However, since you're going to be doing 1099 too, these two products are very, very similar in nature. And in fact, the vast majority of the guidelines are exactly the same, including our methods of calculation. So each one, the bank statement has a fourth method. Our 1099, we offer 3 ways to calculate. We offer calculators, and we're going to show you a couple of those demos briefly. But everything is really built for ease of use also, to help you kind of find the path of least resistance and which method is going to work best for your borrower. So let's jump into the bank statement overview, and just keep in mind these all will apply also to the 1099, those different possibility for qualifications that we just talked about. And then I'll show you a couple of the tools and resources that we have. I do always direct people towards our website, because we're one of the very few companies, we might be the only company, that we don't require a login to see our guidelines, our program descriptions. So really, if you go to luxurymortgagecorrespondent.com, right there in the resources and documents, you can see our matrices, our deep dive guidelines, our calculators, our submission forms. So we really make it, available to everyone, even if you're not the one submitting the loan and having access to the portal. Everything is also duplicated in the portal, but we also have it available to, the public, if you will. I have to plug LMC just really quickly here. We are a 26-year-old company, so we're not new in the business. We've been doing non-QM now as our primary focus for about 5 years. Whoops, I think that might be Kathleen. Can we mute? I get distracted easily, so bear with me, guys. But yeah, just so you know, we were able to obviously not only withstand the crash of '07, but additionally in March of 2020, when everyone's non-QM warehouses shut down, as we began to rehire, I would hear horror stories from new underwriters coming on board, saying that they were having such a hard time trying to find a new investor for these loans, and people were backing out. So it's really a kind of a badge we wear with pride that we did honor every commitment that we had made prior to COVID. We went ahead and purchased all the loans that we had committed to. So I do like to just throw that out there as a little plug. Just really quickly on the opportunity of non-QM, if you are newer to the non-QM space, these are just some of the opportunities that are out there specifically related to these two products, right? Mind you, we have 6 products within the Simple Access suite. But, self-employment essentially is on the rise. We're expecting, and this is not my opinion, right? I wish I was that famous to publish these type of stats, but this is actually from the U.S. Bureau of Labor Statistics, that we're anticipating 50% of our labor force in the United States to have some sort of income or portion of their income from a self-employment source within the next 5 years. So the opportunity for non-QM is only going to continue to grow. We also hear about this labor shortage, which may be true, but that goes back to supply and demand, right? If you look at really the unemployment rate between pre-COVID was at around 3.5%. As of today, we're sitting around 3.8%. So even though there's a labor shortage, people are working, but they're just deciding to work for themselves, right? So this is our huge opportunity. Of course, interest rates are going to continue to rise. We may see a little dip, right? But it's probably not going to be near zero again for, perhaps in our lifetime, right? This was a really unprecedented thing that happened. And of course, the agency is going to continue to increase their costs, reduce their risk. And we're seeing that happen particularly for high balance loans. I know you said you're licensed in California, a high balance state. So we're going to be impacted in those scenarios. Just a couple highlights on the product itself. Loan amounts do go to $4 million. We don't have MI on any of our products, even at 90 LTV, of course, because we are a private investor. 620 is where our FICOs start. DTI goes up to 55 on the back. We do allow recent derogatory events, as recent as 2 years, 30 and 40-year IO options, and unique properties, non-warrantable condos, and on occasion and by exception, a condotel even. So this is one of the areas that we do a lot of exceptions, and I'm sure Kathleen has mentioned, you guys may have even noticed already since you're doing business with us currently. We make a lot of exceptions. About 30% of our pipeline at any given time has one or more exceptions. So just keep that in mind. If you have, what others consider excessive acreage, we'll go up to 20 without considering excessive acreage on an exception. So LLC vesting, trust vesting, we do these all day long. If you are vesting in an LLC or a trust, after the training, we can send you out the prerequisites that they're not really prerequisites. I consider them prerequisites because we do hope to see those documentation up front just to make sure we're not going to get to the closing table and have any signing issues because, the LLC has, 10 properties in it and we didn't get a chance to review it. And then those are our available terms there at the bottom. So we do have ARM and fixed rate mortgages. For purposes, we do non-arm's length transactions all day long. Cash out refinance, we do need 6 months seasoning. However, if my LTV is 75 or less, there's actually no limit on the amount of cash in hand. So this is a relatively recent guideline enhancement. Greater than 75 is $500,000 max cash out. However, another area that we do make exceptions in. So if your borrower, has a good risk position and they must have $1 million cash out or it's no deal, feel free to send this up to Kathleen. We look at the overall picture of these loans. We have a whole team of scenario desk experts and exception desk experts who will, really analyze these borrower situation inside and out and make sure that we're, okay with that risk level. But we do make a lot of exceptions. Rate and term refinance, there's no seasoning required. Of course, we can combine a purchase money second or a HELOC into that first. Also, we can recoup an extensive rehabilitation project that happened within the last 6 months, or if they purchased in cash in the last 6 months and they want to recoup some of those funds. So delayed financing, and those are all considered rate and term. Interest only, 30 and 40-year terms. The IO period is 10 years, and we have fixed and ARM options. So we can use that IO payment to qualify in many instances. On a fixed rate mortgage, we would utilize the start rate and amortize over 20 or 30 years. If it's a 30, we're going to use 20. If it's a 40, we'll use 30 because we're going to assume that the borrower is going to maximize that interest only period. If it's a fixed with an ARM and IO, we're going to utilize whichever is greater, either the start rate or the index plus margin, again, over that 20 or 30 years. Credit requirements. So unlike some, GSE specifically, right, we're not going to always look at the lowest middle score. In fact, there is variance between the products. So if we bring on other products outside of bank statement and 1099, this may be different. But for our bank statement and 1099, we're going to use the primary income earners score. So their score must be greater than 620. Because these are manual reviews, we are going to look at the trade lines. So we have a trade line minimum, 3, and one trade needs 2 year seasoning. One trade needs to have been open within the last 6 months. So we can actually use the same trade to meet both of those requirements. So for example, if my borrower has a 30-month-old trade that he closed 2 months ago, and any other 2 trades, open or closed, that is sufficient. So it really results in no open trade lines being required. Derogatory events. This is another big win for us on the non-QM side. bankruptcy, foreclosure, deed in lieu, short sale, 120-day late, we can go up to 70 LTV with only 2 years seasoning from event completion. Collections charge-offs generally, you know, if it's less than 250 or not, if the aggregate doesn't exceed 1,000, we're going to ignore them completely. Accounts greater than that, if they're affecting title or have the opportunity to impact title, then we'll have to take care of that and have it paid off. And then medical is always excluded. Judgments and liens kind of follow the same suit, right? We do want them paid, cleared prior to closing, unless they have a payment agreement and they can show 6 monthly payments made on time, at which case we'll include in the DTI and subordinate if we need to. Mortgage pay history, we do look at relatively closely because that is our asset, right? So no lates in the last 12 months is really what we're focusing on. Although when we get to the end, I have a couple exception examples that I'm going to go over with you guys, and you'll clearly see it. We'll throw these kind of out of the water. So although there are guidelines, I kind of refer to them as guardrails in some instances, because we really do look at it from a common sense standpoint or viewpoint. We do allow first-time home buyers, so long as we have a verification of rent for 12 consecutive months at 0 times 30. So this 12 months can be any time in the last 3 years, as long as there's a 12-month consecutive period within the last 3 years. You know, they could be living with their parents now, perhaps, but, you know, 2 years ago they had rented an apartment. We do also allow rent-free up to 80% LTV, as long as they have a 10% minimum contribution of their own funds, and we will allow that for a primary or second home. Additional caveats, these are just some little tips to throw out there. We do have a maximum of 15 financed properties and 8 loans or 10 million in aggregate with luxury. We very recently had a 14 pack in the system that I saw, which blows that out of the water, right? So again, exception basis, we would look, you know, this particular borrower owned a ton of properties. Not all of them were financed, of course, but we financed 14. So condo projects less than 10 units, the borrower can own 1 unit. So the only reason I'm throwing this in there, if you were to look at the guidelines, it specifically states that our borrower can't own greater than 10% of any project. If the entire project is 8 units, obviously 1 is going to exceed that mark. So they could still purchase 1 unit if it's less than 10 units. Reserve requirements. So all of our products do have a reserve requirement, largely based on loan amount, but there's a couple other nuances that we'll touch on. So between 150 and 1.5 million is 6 months payment. 1.5 to 2 is 9. 2 to 4 is 12. If we have greater than 85 LTV, it's going to be an additional 3 months, and DTI exceeding 50 is an additional 6 months, unless we can meet the residual income requirement. If you're familiar with the VA's residual calculator, ours actually matches that. So we have, you know, it's very, very similar. We do have our own proprietary calculator, but it is very similar to that of the VA.
I'm sorry, that's fine.
Any additional real estate owned, whoops, sorry, can we maybe mute that one? I'm the host, maybe I can mute.
Understandable.
There we go. I like being the host. All right. Additional real estate owned, 2 months payment for each additional property. We do have a alternative calculation method just to keep in your back pocket. If your borrower has 100 properties, we're not expecting, you know, 100 tax certs and insurance forms. There's a percentage that we could actually use based on the total value of those. And then 1 to 2 years self-employed is an additional 6 months. So obviously we do go down to 1 year self-employment if that is the case. Now these do layer on top of each other. So for example, if I have like a $2.1 million loan and my
I have to let you go. I'm in there.
Oops, let me go mute somebody else. I don't want to mute myself here. Okay, I think that solved it.
It was
sorry
Abraham.
about that.
It was Abraham. You can mute if you can mute Abraham.
I keep calling him out. Thank you. Let me see if I can find him because there's a couple people. I'm just trying to go through here and mute anybody that's not myself. So thank you for that. There we go. Okay. Thanks so much. Sorry about that, guys. So, excuse me. Where was I? If I have about a $2.1 million loan, I think I said that would be 9 months. No, excuse me, that would be 12 months. And then if my DTI is exceeding 50%, I would need an additional 6 months. So I'd be looking at 18 months reserves in those scenarios. Cash out may be used to meet this reserve requirement. So if it is a cash out transaction, we can use the cash out from the transaction itself to meet reserves. Asset account values. This is how much percentage of the face value of each particular type of asset that we would consider. So cash and equivalent is 100%. Marketable securities, we take 80%. Retirement funds does vary based on the borrower's age, whether or not they're retired age, 70 or 80%. And Bitcoin, we will accept for 50%. We do allow the use of business funds so long as the borrower owns the majority of the business. So they do need to not only be the majority owner, but actually own 51% or greater of the business. Additionally, we would need a letter from both the borrower and their CPA stating that withdrawing these funds is not going to have a negative impact on that business itself. So now we're going to get to, that's pretty much everything credit, asset related, and here is where we're really looking at qualifying our borrower. So we have 4 methods of calculation on the bank statement side, 3 methods of calculation on the 1099 side. Now those methods almost exactly mirror, well, the method mirrors, but the granular details of the calculation itself is not identical. So I'm going to talk through those on the 1099. But just to give you an idea for our bank statement calculation options, if you have personal statements, well, first of all, we have 12 and 24-month programs. So, of course, there's a little bit of a benefit on the 24 months. And hopefully by this time, you know, the 2020 COVID massive impact is not going to be that much of an issue, right? We're now in 2022. So 2021, hopefully we saw a recovery from, you know, the year prior. So as long as we're trending up, if we're trending down, it may behoove you to look at a 12 month. So just food for thought there. Atypical deposits will be sourced for all methods. And then the kicker for the personal statements, because we do allow all eligible deposits, eligible is really the key word there. If you notice the second bullet point, we do need 3 months business bank statements to verify that the transfers or inbound transfers or income is coming from a business. So that's usually where the personal method gets derailed. Normally, I've seen maybe a handful, but typically if someone has a business bank account, that's what they submit to us, right? Not the personal. Once we have commingled accounts, we can still use those personal statements, but we're going to use a business method of calculation. So either 1, 2, or 3 on the business side, we will use that method of calculation on the personal statements. So let's look at 1, 2, and 3. Business method 1 is uniform expense ratio. The math is super simple. I'm just going to calculate a total of all of my deposits and hit them with a flat 50% expense ratio, and then divide that sum by either 12 or 24 months. So on the right-hand side there's a quick little example if you want to check that out, but it's relatively easy, right, to the concept. And the 1099 is exactly the same. The difference is on 1099, we have a 25% flat expense ratio. So that one is a little more aggressive, right? Than our bank statement loan. Business statements, number 2 is a P&L. So it does need to be prepared by a CPA or a licensed tax preparer for the same time frame as our bank statements and or our 1099s that we're using. For bank statements, we need the bank statements to support 75% of the gross receipts on the P&L. If it's a 1099, we need the P&L to support, actually we need the 1099, to support 90% of what our P&L shows. In either event, we're going to use the P&L to qualify the net. Method number 3 is exactly the same as method number 1, but instead of using either a flat 50% for bank statements or 25% on the 1099, we're going to use whatever the CPA tells us. So on the right-hand side, you can see using the same numbers as method 1 and 3, the little examples on the right. Method 1 is using a 50% for bank statements. It got us $10,400 in income, and getting a CPA letter to show us 36%, effectively added almost $3,000 to our qualifying income. So just keep that in mind. Now, one pitfall, because I don't have the 1099s up here, we do want to be cognizant of what that minimum or flat expense ratio is. So on the bank statement side at 50%, CPA letters are more common to use for the expense ratio because it's at 50%. 1099, however, is all the way down at 25 already, right? So although if someone is, working as a contractor consultant from their home and they have a 10% expense ratio, outside of that, right, it's pretty hard to find a business that's under 25%. Not to say that they don't exist, but what I have seen, just as a heads up, I've actually seen a CPA letter come over greater than 25%. So that's what we want to kind of be aware of. If I'm getting a CPA letter, make sure it's less than 50% on a bank statement or 25% on a 1099, or else it's better just to go with method number 1, right? Because we're actually going to give ourselves less income in those instances. Some exceptions, just to give you guys a, apologize for that. Sometimes it jumps on me. Just a couple examples. These are very recent exceptions. And in fact, if you go onto our website, luxurymortgagecorrespondent.com, under the About Us tab, you'll see something called Success Stories. And these are recent scenarios that we've done and exceptions that we've made. A couple of these are actually from there as I update it as they update it, I try to stay updated as well. But let's just run through these really quick. So the first one at $2.9 million, 30-year fixed. It was a purchase on a bank statement loan. These are all bank statement examples. Great credit, right? 770 and 75 LTV. So the borrower did need to use business funds, which remember you need to own 51% of the business. Well, they actually owned less than half of the business, but they did have it with one other partner. So we were able to document their ownership, track of the percentage, and they still qualify based on their portion of ownership. So we did go ahead and move forward with that. Due to their strong credit, and they had great post-closing assets and a low DTI. So comp factors are, of course, huge with any investor. They want to know what's in it for me, right? So long as we really push those comp factors, assets is probably always going to be your best one, and the lower the DTI, the better your odds. Scenario 2 was a $1.2 million purchase at 60%. And 765 score, bank statement on a primary residence. This borrower actually had 2 mortgages currently in forbearance. One property was pending sale, that was their primary, but they planned to keep the other one. The down payment was going to come from the proceeds of the sale of one of the homes that was in forbearance. So we did move forward because of a 60% LTV, bank statement, great credit. And we just required that the retained property had been reinstated and was made current. And we also had strong reserves in this scenario. So you'll see that as a very common comp factor amongst our exceptions made. Scenario 3, $380,000. It was a purchase also at 80 LTV, and a non-owner, right, on a bank statement. So this particular property actually exceeded 49% of commercial space. But we did move forward because it was a restaurant that they had owned. And they were looking to expand that restaurant. And based on the overall, picture of the scenario, they had long-term employment. The restaurant had been there for a long time, low DTI, high FICO, and very clean credit. So we were able to go ahead and move forward on that as well. So just some examples to see if, if you have loans that you're wondering about, if they're in scope or not, definitely roll those up to Kathleen. She can then escalate it up through our internal resources and see if it's something that we can make it happen. This is a screenshot of our website. So this one is the wholesale, I do apologize, but luxury mortgage correspondent is where we would go. Also has the resources and documents tab. So this is where I was mentioning in the very beginning where all of our information is housed. So here you can find our deep dive guidelines, program descriptions, calculators, stacking orders, submission forms, everything that you need is going to be in there, including, well, you're not doing the business purpose loan yet, but if you do decide to onboard, there's a couple additional forms that we do require because of the nature of the business purpose. The calculators, this is just a quick demo of one of the calculators. This is the bank statement calculator. And I did mention we have 4 methods of calculation. So certainly we're not going to expect that you would do the calculator 4 times, right? So this yellow input tab and all the calculators work exactly the same or the same methodology, if you will. If you were to go under that resources and documents, you'll find this located here. Input tab, is where we're going to put all of our data entry. And then you can toggle to the different methods across the bottom. So in this case, I chose method 1. You would scroll to the bottom and all this data will carry over. So you can really just toggle between these and scroll to the bottom and it will give you results. So you can see which is going to be the best way for you to go as well. And if it is not your cup of tea to, oops, sorry about that, double clicked again, to actually be scrubbing out bank statements. We also offer a bank statement review service that is also through our portal. And all we require is the borrower's first and last name. You submit your bank statements with a cover letter. The cover letter is also in that resources and documents, and it's just to indicate which method you want to use for the calculation. And then we'll post results in about 24 to 48 hours. Back to the portal. At that point, you can choose to move forward or not, but you'll have a calculation, at least an estimate, right? If there's updates and things like that of nature, it could change. Say we have not the most current 12 months, but 12 months nonetheless. We need a more current one by the time the loan closes, right? Those scenarios do happen, of course, but it really gives you, it's a time saver and it gives you a good indication of what your income is likely to be. Our submission checklist, anything in yellow highlighted is going to be required at initial submission. So also under resources and documents. I don't know if you guys, I doubt that you guys will be the submitters. Usually this is someone in ops, but sometimes we do have loan officers as well. But this tool is definitely for sales. This is our quick quotes tool, also at the top of our website, as well as on Kathleen's signature line and mine as well. So this one you can enter in very high level details, as you can see, but it will give you estimated pricing at the bottom there and let you know if it's in scope. And that's pretty much it, you guys. These are just all of the products that we offer. And we're happy to circle back should you decide to utilize any of the other programs. So that's all I got for you today. I will let Kathleen jump back in and finish up any other nuances or caveats you wanted to discuss with you guys.
Yeah, I wanted to know, am I able, can you allow me to share my screen again? I wanted to just highlight some things on the bank statements and our main guidelines.
Let me see.
Okay, yeah, I'm trying to.
I will try. Here we go.
So while you guys are doing that and giving it back to Kathleen, I'm going to jump in here just so you guys understand. Luxury is the investor. This is still coming through ICO. So this does not change your normal chain of command for communication. If you guys have questions on pricing, you're going to go to Ruben. Ruben gets the pricing for that. Not only that, I believe, if I remember hearing from Ruben yesterday, this is going through Optimal Blue. So the non-QM pricing is going into Optimal Blue, and you will be able to get pricing from Ruben through Optimal Blue. As far as questions on guidelines and other things, please reach out to David Tran and or Darshan, and we'll make sure that they have access to all of the guidelines so that we can make sure that we can close these loans for you. Kathleen, did you want to share your screen?
Yeah, with that, are you still okay with me showing the guidelines? Are you?
Yeah, no.
right?
The guidelines, I actually was gonna have the guidelines sent out by Ruben so that they can make sure that they reach out to either Ruben and or David Tran, so that we can keep everything, you know, kind of going through us first to make sure
Right.
that ultimately whether it's gonna end up with you or with one of our investors.
Well, that's why I was asking. Maybe I
Yep. No, that's not a
Shouldn't.
problem.
It
So
isn't a
again, for everyone on the call here, if you need rates, they're going through Optimal Blue, and reach out to Ruben. If you're having any trouble, Ruben actually shared with me that he's got a couple screenshots to make sure that you guys make sure you put the right things in the right place so that you do get the pricing correctly. In the beginning, until you guys get used to pricing non-QM loans through Optimal Blue, I would suggest reaching out to Ruben and making sure that you kind of hold your hand through the process. Might actually have him come on next week and price out a loan for you guys through Optimal Blue so that you guys can see how easy it is. But it's that easy to also make a mistake. So please know that next week we can go through pricing through Optimal Blue. Again, the guidelines, you will be able to reach those guidelines either through Ruben, David Tran, and Darshan. And other than that, I think that's pretty much it for today. Normally, you know, I have you guys in and out here usually in 30 minutes. And I'm sure that there's going to be a myriad of questions. Are there any that I see that Kathleen on the side was trying to answer as quickly as possible? Is there anything else that you guys might need?
Is there just a couple things I can just reiterate
Yeah,
if you
please
don't
do.
mind on the bank statement? Okay.
Of course, Kathleen.
So, right. So when you're meeting with your client, there's a couple of really key things to ask for right away. And one is to confirm their percentage of ownership. The minimum ownership is 25%, okay, to become self-employed. But we've got to find out what the percentage of ownership is, because if it's 50%, then we automatically know if we're looking at a business bank account, we can only use 50%, okay? The other thing is, when they do present a bank statement to you, is it business or is it personal? If it's personal, we have to ask, do you have a separate business account? Because there's different ways to calculate 100% personal versus a commingled personal and business account. So those are really important to ask. Also, when you do get the bank statements, really look at the deposits. Are there transfers coming in from a savings account? Typically, you can't use that. Are there transfers coming in from we don't know where? So bank statements, you have to really do a deep dive as the loan officer and really understand everything that's coming in. I do highly recommend using the service that Kimberly talked about, which is a pre-scrub, where you throw in the bank statements into our portal. We'll do the review for you. And what's nice is the review comes back and it will tell you what we think are the ineligible deposits. And it will also mark them on your bank statements. So you have a little yellow bubble that will show you, we think this is ineligible. Now, this is just the beginning of the process, because this is actually something that's through a third party. It's not going through our actual underwriter. So this helps you look at and go, okay, well, Mr. Jones had a $30,000 deposit, but normally his deposits every month are, $5,000, $4,000. So it's actually kind of helping you and guiding you through a conversation to have with the borrower before you submit the loan, okay? Another thing that we're having issues with is declining income. So yes, we give better pricing with 24 months. 24 months is better pricing, but we might not want to do 24 months, right? We might just want to do the last 12 months. So we have to look at the declining income. Anything over 10% is an issue. Okay, so I just want to bring that up. Another positive thing about the bank statement program for someone, the majority of their income, they're supposed to be self-employed, right? But they can use other sources of income. They can use Social Security, they can use W-2, they can use pension. But here's the deal. If they've got other types of income and it can be validated through transcripts, make sure your office gets those ordered right away. Now, right now, for 2021, these transcripts are not available. So what we're asking for is the CPA to validate that that's the correct 1099 income. We will be filing that income on the 2021 returns. And we can talk about that a little bit more, but what we're trying to do is validate as much income as we can for these borrowers. Another source of income that we see a lot of are rental, rent. Someone has a rental property, get us the leases for that. But it's interesting because a lot of borrowers, I think they just assume here are bank statements and there's a lot of income coming in and I should qualify easily, but the sources are not all the same. That's what we're finding out, right? So if the sources aren't all the same, we have to list that on the 1003. Here's the different types of income that this borrower has. So it's really important to just do your homework up front. And I will say, if you do go and use our service to calculate the bank statements, and let's say you put 24 months in, and you want to go 12 months, put in a new loan. Don't go with that other loan with that income calculation, because that underwriter is going to go off of that. We're only using 12. We just want to see 12 months, right? I just want to see if there's one other thing I wanted to talk about bank statements here. Also, if we're going to be using assets from a business bank account, we do need a CPA to state that that will not have an effect on our borrower's business, day-to-day business. So, and all of what I'm saying are in the guidelines, and I'm pretty sure that your underwriting team is going to get this over to you. But these are just things that just seem to kind of be hurdles that we see along the way. Okay, another positive thing about our bank statement product, if someone is in the service industry and they get tips, we will allow the bank statements to show the tips and use that as income. So that's another positive way to use this income without getting a set of tax returns, right? One thing about the bank statements is look for NSFs. We do accept about 7, I think it is. Let me look here. Well, it's less than 7, but we do make exceptions. And again, what Kimberly said earlier is we do make a lot of exceptions, but what we want to do is we want to get those exceptions approved up front before the loan even comes in to make your life easier. So to get that exception, we need your URL completed. Make sure you have the income correct, the assets, your credit report, and your 1008. And we can get back to your underwriting team with a full approval on that. Now, chances are there's going to be a pricing hit. Typically, if it's outside of the guidelines for LTV, loan amount, credit, declining income, there's going to be a pricing hit. And I've seen anywhere from a 0.5 point to a full point. So, but we are going outside the guidelines, which is a positive. Ordinarily, we couldn't do the loan. And I really like the fact that we do get back to you within, 48 to 72 hours. So, if you have a deal, and especially if your borrower's trying to make an offer, right, on a purchase. We all want to know that we have a deal, right, before that happens. So you can put a TBD on the 1003 for the address, but just make sure that we have all the facts on the borrower's credit and income. So that's all I wanted to say about bank statements. It's a great opportunity for borrowers. It is a little more work for you, but it's definitely a viable product. We see non-QM as being really, really big in the next year. It's been growing exponentially. So that's all.
Thank you very much, Kathleen. We
Mhm.
really appreciate you coming on today. That last thing that Kathleen said, I want to touch on quickly. Look, these are not regular vanilla loans. These are not Fannie, Freddie, FHA loans. And usually what happens with one underwriter, I know there's a couple people that have this issue. One underwriter at one company might say yes, and another underwriter at a different company might say no. What the kind of appetite that our different investors have for these loans can vary quite a bit. And I want you guys to understand that because there is a little bit of back and forth, and unlike regular loans, every single non-QM loan goes through a third-party QC review. So that can add days to closing for us. So I want you guys to understand that, hey, I can confidently say, because we've done it, hey, these vanilla loans, we can get loans in and out in 2 weeks, right? So the Fannie, Freddie, the FHA stuff, the VA stuff, we can get those loans in and out very quickly. These non-QM loans, because there are third-party QCs a lot of times that are involved, whether it's internally or externally, they don't move as quick. So you have to make sure that when you get an approval, that you get all of the conditions in completely and as much as possible, as quickly as possible, and let your borrower know that even after reviewing those conditions, the underwriter might ask for more. It's also important for you guys to loop in your agents, especially on a purchase. Let your agents know every step of the way where the loan is, what the problems are, what the problems might not be. Not for every detail, but just let them know, hey, we're having this thing that we're trying to get over, or this issue, we should have an answer in 2 days or 3 days. Make sure that you set expectations correctly so that you're not saying, hey, we're going to close today when you're really not going to close for the next week. So make sure that you do a good job for these non-QM loans of setting expectations with escrow and agents correctly on any purchases. On a refinance, it's a little bit different because obviously the borrower's already in the home, but just know that as you move forward with these non-QM loans, they're a little different. They're not something that you can just throw against the wall. These are a little bit labor intensive. And as you do more, you'll get more comfortable with them. Again, thank you guys for your time on the phone today. Please feel free to reach out to our team with anything from pricing to guidelines. And if I don't have any big questions, because I know there's a lot of people on this phone call, I'll be more than happy to answer, or Kathleen, since we're on, answer any kind of quick questions that you guys might have. If not, I'll let you go about your day. Are there any questions you guys would like to answer or ask now?
We do have some in the chat right now. One's from Joe, and he says, is it possible to get someone to take away info sheets to leave with realtors? Also get a copy of the presentation. Okay, so is he asking for marketing material?
He's asking like for marketing material.
Yeah, okay, yeah, we definitely have that. If you send us your
Kathleen, what you'll do is you'll send it, you'll white sheet it for us, and we have someone internally that can put all of their information on it.
Usually we actually put it on for you. I can ask if they can just do a blank template for you guys.
Yeah, so and then we can add the loan officers and their NMLS licenses.
Okay, okay. The next question is, key thing to ask for ownership. If it's 50%, then you can only use 50%. That's absolutely correct. Yeah.
Well, actually, that's a good question, but it's got layers. It's actually not correct. So you have to take 50% and then whatever the expense factor is out of that. So it's
right. Yes.
Layers. So I'm going to give a general about that question that Joe asked. Okay, hey, the borrower gets $5,000 a month. They're only a 50% owner. So guess what? It's $2,500. But guess what? There's a 50% expense factor. So that means that of the $2,500, you can only use half of that, which is what is that? $1,250. So it's not just what they owe, how much they own of the business and how much income is coming in. You also have to take into account what the expense factor is. So it's a dual layer on calculating.
Yes, it depends on what method you're using for the expense factor. That's correct. And then Dominic asked if I can go over what constitutes an eligible deposit and an ineligible deposit for people who are trying to qualify. Well, eligible deposits are anything related to the business, right? However, if someone, let's say someone has a personal account and the deposit actually is coming from a transfer from another account, we then have to get that account to make sure we're not double including the income, right? So anything that's business related, that is something that they're going to be able to use on the actual business account. Other deposits, you have to support those. If it's W-2 or pension or, Social Security, you'll have to validate that with a benefits letter or, some sort of backup on that. So, but that will be counted separately, and that will not be subject to any sort of expense factor if it's outside of the business.
And just so you guys know that, these loans, because there's providing bank statements to get qualified instead of tax returns and W-2s and whatnot, they can be very tedious. So there could be, hey, I need you guys to source for me all deposits over XYZ dollars for the past 24 months. So it could be very labor intensive. On top of that, because you guys are loan officers on this phone call, and over the past month, we've had interest rates go up. I want you guys to understand that this is not a regular loan. They're not expecting, these borrowers 9 times out of 10 are not expecting a 4% interest rate on these loans. These loans are high. These are higher interest rate loans because they're higher risk loans because they're using different things to qualify them. So please don't let your internal belief of what a rate should be for a bank statement loan, because it doesn't look like the rate on a Fannie Freddie loan, don't let that hinder you from selling these loans. These loans, when you turn around and you tell a business owner that you're looking at a 7.5% on a bank statement loan because they're only putting XYZ dollars down, and we're talking about a big loan amount, whatever you're going to be sharing with the borrower, trust me, that borrower is going to get the same quote somewhere else, or they're going to hear from big banks, hey, we don't do those loans. We don't, at Wells Fargo, at Bank of America, at B of A, we don't do those kinds of loans. So just know that there are, don't let yourself get in the way of selling these loans. They usually know, hey, I went to Wells and I tried to get qualified and I don't show enough on my tax return. So, I heard someone talk about a bank statement loan. So just know that it's, they're out there, they're common, they're a little bit more labor intensive, and please don't hesitate to reach out to the team here to get your loans done. And I think we've gone through all the questions on the chat. Again, if there's anything, please reach out to our team, and Kathleen will send me a flyer and we'll get it out to you guys and put the information on there. All right?
That sounds great. Thank you, everyone. Thank you so much.
Thank you, guys. Thank you all. Have a good day, guys.